Hello, trading is closed on May 9th, 2019. We'll go over our calls. Look for the pattern with the early high and the late high. That's what this is. Tomorrow's pattern has the early low. Doesn't mean you won't gap up first, and gapping up is what almost always happens when this pattern has a middle of the day high higher than the early high. Almost always you gap up, take out these highs early, and if you don't, it has very negative implications. For the reasons we'll discuss, I think that even though futures are down as I'm recording it, that it's very likely you're going to get such a gap. Now, the other call said that based on other people's work, a number of other people call this a buy signal, particularly if we gapped up over this high. I said the plan for today was to look for the open because the open today is a surrogate for the close yesterday. And if we gapped under this low, which is what happened, then the whole pattern's killed. During the day, MEJT said ultimately both higher and lower prices would print. We got this good rally. MEJT said it was false and would retrace, and that's already happened. We are extremely oversold here, and based on somebody else's work, this is a strong bottoming formation. What we need for confirmation is to gap up and take out this high, which, as I said, is the most likely scenario. And if we do that, we can have a good rally, and this can be a very significant low. But if it fails, if instead we gap under this low, it could be extremely ominous. So let's go over all the reasons why I think this is a good candidate for a low, and is a low if we take out these highs and don't reverse immediately. Gap down, hit lower lows, closed over all of them. Not only did you close over all these lows of the day, you closed over these earlier lows. So the break down below the earlier lows didn't stick. What you need for confirmation is to promptly take out these highs. Here's the old VIX. Here's the new VIX. Here's the old VIX. You see we have bars once again completely over the upper Bollinger Band. That's a sign of extreme pessimism. I've seen a number of people online saying now isn't the time to buy. More trouble's coming. In spite of today's recovery, look how we have a huge increase in people wanting to buy puts. Last time puts overwhelmed calls like this was right at the Christmas low. Here's equities only. We've gone up to the upper Bollinger Band. NASDAQ McClellan oscillators at the lower Bollinger Band. Reversing from that level, which hasn't happened yet, gives you a buy. This is a TD line from Tom DeMark. This trend line is very important. This is a valid break, and it's not anything out of the ordinary to come back and retest the line on the nose, which is what happened today. Since the break's valid, the expectation is the rally is going to continue from here. But if we gap under this low, the whole pattern falls apart and it has very ominous implications. We did recover from a drop below the 50-day moving average. This 1, 2, 3, 4, 5 is not the only way to count this, as we'll see. A lot of people count this as 5 waves up. It's a valid count, but it's not the only count. Here's our 10-week exponential moving average. We went below it and then recovered. We have a daily bar reversal involving the lower Bollinger Band. For confirmation, you have to continue higher tomorrow. Continuing higher from a reversal bar involving the lower band calls for a challenge, not necessarily a touch, but a challenge of the upper Bollinger Band. Now, we haven't had the reversal yet, but again, the commonest thing would be gapping up tomorrow. Now here's the 1, 2, 3, 4, 5 count. It's a perfectly valid count. It's also possible using the orange count for that to be 1, that to be 2, and that to be 3, and 4 could just be a 50% retracement of wave 3. And if that is what it is, it's a perfectly valid way to count this with beautiful Fibonacci balance right here at the low. You can do this calculation for yourself. It really is a perfect fit for the ABC down being completed with good Fibonacci ratios every step of the way. So the plan for tomorrow is to see how we open. If we gap up and take out this high, not a given, but that's what I think will happen, very good chance this low is going to hold and we're off to the races again. We have the oversold indicators, the sentiment, plus we have higher targets. We have a higher target from the FOMC whipsaw. We have a higher target because all this drop came from a news event, and those things just don't stick. Why I was suspicious of this drop from the beginning. So we're hoping for a gap up and a good rally. But remember, when these things fail, they fail in grand style. Futures are down, and if we gap under this instead, then the support fails, and the only time crashes occur are from oversold conditions. So that's not what I expect, but if it's there at the open, we have to reverse gears. Otherwise, pattern with the early low, but the odds are gapping up first, and this low I think has a good chance to hold. And that's today's call.